Well, welcome back, everyone. Another day in markets that we are seeing risks grow in at these all-time highs. We've started to see the market pull back from the very top of this long-term uptrend channel on the primary market, the S&P E-minis. Let's zoom in to the hard right edge over here as I record this video on Friday afternoon into the week's close for the market. So some negativity coming out on the geopolitical front has taken oil higher, taken the market down. However, we're well off the lows from the inter-session lows today, being down in the 74.20 area. We've come back up, but we still reside below a couple of important volume point of control areas. 74.80 above there. The door opens for more of a repair at this stage for the market. However, back down below 74.40, downside risks down into this nested VPOC area around the 74.14 area opens up, and it's really the breakage of that zone that opens up downside risk to this pink line. What is that pink line? Well, it's the one standard deviation line above the best fit line in this very long-term channel. It would be a technical event from a on the surface price standpoint, and it would open the door for us to retrace down to the mean or the center of that long-term channel. The center of that long-term channel resides in and around the mid to lower 7100s. Now, is the market more likely going to come down? Well, we've seen a few things happen that show an increased amount of risk using technical tools like the triple S indicator on a 4-hour chart that tends to project out, going out about 3 to 5 days. I'm going to look at it from the lens of the triple S indicator, and then I'm going to add the champion trend pack into it as well, and we're going to get a solid insight off of this. From a triple S indicator standpoint, what do we see happening over here? Well, we had this amazing signal state where we got into a buy signal state. It happened right there on the 2 a.m. Eastern Time bar, April the 2nd, and it has been up and away with some consolidation. You know, we saw the double green dots go to the single blue dots, but we held the MSR channel, which is the moving support and resistance channel that I'm tracing, and we continue to bounce off of it. We're now starting to see the blue dots appear again, but is this time different? Well, my answer is yes. We have come up to an extraordinarily extended area. So on the surface, the 4-hour chart using the triple S indicator is telling us that things are starting to cool off. We've gone from the double green dots to the single blue dots, but so far still holding the test of the MSR channel. The triple S line's in the bottom quadrant, which is not great, and of course it can succumb to the pressure of selling begetting selling. Now, when we add the champion trend pack toolkit to this on the same 4-hour time frame, we can see that we had a buy zone plaque come into play right back over here at the very end of April. That buy zone from the champion trend indicator has held up until today, where it broke on the last closed 4-hour bar. That happened right over there. And we've left the champion trend buy zone, moved into a neutral zone, locked in a negative divergence. That happened yesterday on the 14th of May on the 10 a.m. bar. So there are some structural changes afoot in terms of technicals and price action at this stage that are giving us warnings that there may be some downside risk. Of course, we've got NVIDIA up next Wednesday, and the daily chart is still holding intact with its buy signal. Okay. However, we have seen some warning signs even on the daily chart. We're seeing that fast spike come down into the channel. We're seeing the triple S line move from the 4th quadrant, getting up into it this week, yesterday, and then coming down back into the 3rd quadrant in today's trade. So we're starting to see more than just fraying at the edges. Small cracks or sprains are occurring to the market at this moment in time, and one has to be aware of what that can present in terms of downside risk. It could be a move that takes us back down towards the mid 7100s. Now, the market may be able to hold up, bounce, consolidate. It's still a strong uptrend. It's extended, but it's still a strong uptrend. It may be able to hold up, bounce, keep itself up in the air for a little while longer until we hear from Jensen next Wednesday. And then comes the moment of either it's sell in May and go away, or we're here to stay and continue to play. We'll see which side plays itself out. Now, throughout the last handful of days, well, since last Friday, I've been trading using very discrete trading strategies on a discrete set of accounts that started at zero back at the back on Friday last week. I continue to build on that, not adding a whole bunch today, but getting myself above that 23K mark, using the tools and following the rules as consistently as possible, and doing so live in front of folks in the active trader room and of course on WealthCharts alike. I did a class on Wednesday and folks said that they enjoyed the class quite a bit. I'm coming back to do the class again, and I'm going to be adding in some of the thoughts on how to incorporate the triple S indicator with the champion trend pack, so how they work together to identify high probability turning moments or continuation moments. And we're going to be talking through some great setups that one can take advantage of in a market just like this. So join me tomorrow by going to becomeabettertrader.com/yes. It happens tomorrow, Saturday, May the 16th, 10 a.m. Eastern Time. It's 9 a.m. Central Time, 7 a.m. Pacific Time. Go to becomeabettertrader.com/yes, and you're up for a great educational segment tomorrow morning. I look forward to seeing you there, and I wish you a wonderful weekend. Have an incredible, incredible rest of your day. Bye for now, all.